good morning to everybody. This part of the day is intended to give you an update on our approach to managing contract and commercial risk across our tendering and contract portfolio. But I think it's really important that we, given the particular conditions that we're facing, to focus primarily on our pre-contract, contract award, and then into the contract mobilisation. So what you'll see up here is really a layered view of the Downer Standard and how that sits, first of all, within our purpose, promise and pillars. So Grant showed you our pillars, and this is very squarely within those pillars of relationships and most certainly delivery. And within the Downer Standard, you have your 17 core process areas, whether you're doing mental health training with Natasha, whether you're doing on-site critical risk inspections. These are the things that our key people have developed and over time improved. And when you're out in the field, whether you're in a management review, you have the cues and you have the responsibilities, and then you have the processes which you can check and verify what the people are doing in the field all the way up through to the very top of that governance hierarchy. So I'll get to some of that detail in a moment and guide you through what we mean by the Downer delivery management philosophy and how you can see that in action. So a bit of context, businesses right now are dealing with major supply chain uncertainty, whether that be in transport, logistics, base materials, technology, long lead time items, and certainly labour costs. Now, for a multifaceted services business like ours, we are in the business of managing risk, but also opportunity. And regardless of the prevailing economic conditions, and these are particularly unique, we are all about constantly managing time, cost, and quality, and the commitments we make through our contracting arrangements. So, business and investment communities right now are looking at the impact of post-pandemic uncertainty, but really, when I sit back and look at our delivery management methodology, we are managing the risks of the time through our existing governance frameworks, and they remain the same. And as an example of that, when I went back and we did a review of our more material, more long-dated contracts to understand the coverage for escalation, dealing with CPI, how we look at inflation, you will see a very, very high level of coverage. And that's because we have a very broad mix of contract types that give us coverage through alliance, cost reimbursable, managing contractor. But where we have more fixed commitments, we have formulas and adjustments for CPI and other indexes that make sure that we're not taking the risk on the cost base as the prices and the uncertainty increases. So I think that should give us all a very good level of comfort. So to expand on some of this a bit more, our key really is to be clear on the type of work that we do, where we do it, and the contract models, the payment mechanisms, and the commercial conditions that we sign up to. So we spend a lot of time up front on job selection and spending a lot of time the way we look at risk, we negotiate our commercial arrangements so that we get a very fair allocation of risk. Quite simply, if we can't manage the risk, if we can't see a way to mitigate it, we don't touch it. So what I'm describing now are the endpoints of what happens when you follow the delivery management methodology. And you'll see from the display up here, we sit within the Downer Standard, which is our integrated management system. So over the last few years, we've put a lot of effort into the TDS, and I will go into a few acronyms here, so bear with me. And this gives us our single governance framework, our operational policies, the procedures, tools and templates that sit across our entire business, regardless of the functional area, the sector, the job type or the market. It is the same. And you'll see up on the screen this phrase, consistent, repeatable outcomes. And that has absolutely been the design philosophy as we have developed and enhanced the TDS. So you'll see here the TDS, you've got the key features, but what I think we're really talking about here is Downer's evolving culture and the systemisation of our risk and opportunity management. And it's the way our people think, and any integrated management system is fine, but it needs to be used, and the culture of the people and the managers to make sure that it is tested, verified, looked at for conformances, non-conformances, and the escalation of things to make sure they get closed out quickly. And I think this, along with our commitment to our purpose, promise and pillars, our sustainability focus, this is one of our top business characteristics, and it gives us a very distinct and a very sophisticated approach to our decision making and the way we monitor performance. Right, so we'll get into some of the detail now, and I only have 10 or so minutes, so again we'll be looking very much at that yellow mustard section through to the blue and to the beginning of that handover and kick-off phase, where I think we put a lot of work up front. So I think the points to make here, if you are a project manager, an executive involved in preparing for delivering contracts or monitoring the performance, you'll be seeing this landing screen on your computer, and it will look very similar to this. So by clicking on these buttons here, dropping down boxes, the various sub-elements of the methodologies, processes and templates can be accessed, and they need to be correctly followed in order to move through the governance gates that sit around our delivery life cycle. So if you don't follow the steps, you will get caught at one of our governance checkpoints, and I'll go into a couple of those in a minute, but primarily we're talking about our tenders and contract committee. All opportunities are monitored and developed through our CRM. Now, whilst this is not unusual, the discipline of entering the opportunity, pursuing those which conform to our risk appetite, is an important first step. And what has to happen at this gate is that we classify opportunities in accordance with our risk classification, one being low all the way through to elevated risk, which are categories 4 and 5. Categories 3, 4 and 5 are typically greater than $30 million in value, may have design elements and are generally of a higher complexity. These tenders must be approved by our Tenders and Contract Committee, and anything greater than $250 million must also be approved by our board subcommittee. So opportunities which come to the TCC are now also assessed against our contracting specific risk appetite statement. Now, under this additional assessment, we look at the technical capability of the business to perform that scope of work against a pre-filled scope document, and we apply a scoring system against key contract features, these being client type, to provide a ready reckoner of credit worthiness, public, private, the contract type, I mentioned alliance, cost reimbursable, lump sum, and whether there are other important characteristics like an early contractor involvement, which might mitigate against some of these headline items. And of course, any standout commercial terms like uncapped damages and the like. Now, this is intended to provide another assessment point along the way, and importantly, it also allows us to keep track of our contract mix, the key features, and how we report that to the board. So again, another level of checking at the management level and monitoring by our board and its subcommittee. Now, if we dig into the Tenders and Contract Committee a little bit more, you've got 3 gates of review. The first being an approval to pursue, i.e. before we spend money on a bid, when there's still time to consider shaping the opportunity, who we might want to partner with, and importantly, we look at the opportunity cost of going ahead with the bid or not. The other 2 gates, the approval to prepare the tender and the approval to submit the tender just before it goes into the box. Now, when the TCC does reject an opportunity, it is nearly always at that second gate. So early enough, but it's once we have gathered enough information from the customer's delivery requirements, the business unit have done their work, and that allows us to work out fairly early if it meets the company's risk profile or not. Now, around all of this, you've got the Project Management Office, and it's critical in providing overall governance to the DMM, supporting functions like the Tenders and Contract Committee as well. And the PMO is the process owner of the delivery management methodology. And it is in charge of the constant refinement of the policies and responsible for the many checks and balances which sit around this delivery life cycle. And I'll get to some of these in a moment, but you'll see the bullet points which talk about the touch points to the process. So this process and this methodology never just sits in the drawer. It's living and it's in the management psyche, and it's actually hardwired into the roles, responsibilities, and the way that we also measure and look at the performance of our key people. So the DMM, I think it's also important to note that it's followed regardless of job type. You'll see in this green section up here of the diagram that it covers jobs where you have an engineering component, a build, a construct, an operate, a maintain, or a service responsibility. Now, while there are key differences between maintenance and a construction contract, they've got their own requirements around technical delivery and capability. The same governance processes applies. It's just that these are accessed through a different part of the wheel when you're clicking in. So they just can't be missed. So why don't we look at some recent examples? So if we take a high voltage transmission line opportunity recently that had a category 4 risk profile, it fitted the core capability in a location where we had capability. The head of the business unit brought the opportunity to the TCC well before it came to market, so there were no surprises and no issue with the customer that had assets and financial substance. At the second gate, the business unit worked through the governance requirements through this wheel, filled out all of the pro formas, and these included a peer review of the estimate, a review of the program, which was particularly tight, but that was worked through as well. The preparation of the three-way cash model to make sure that we're not funding the customer's operations and build process, and of course a legal and commercial checklist. And you'll see up here, this is quite an important point, we have legal, accounting, tax, insurance and treasury input to that checklist, which is a very sophisticated document, but varies depending on whether it's a more straightforward opportunity or something like a very long-term PPP style arrangement. So, what were the issues here? Ultimately, the usual things. There were elements here of sourcing overseas materials and the price assumptions for steel lattice, conduits, labour and other key equipment. Ultimately, there needed to be base dating in the submission because we could see that the client was dragging its heel in the assessment process. We also agreed here that there would be extensions of time entitlements for long lead time items because of supply chain. And the legal and commercial checklist also threw up an unacceptable interface risk and a liquidated damages exposure. Now, as I said before, if we can't manage it, we won't take it. And that's exactly what the business did in this case. So the end point for this process being the contract submission was conditional on no responsibility for connection risk to the grid because of this adjacent wind farm development, a commercial qualification around LDs, and a tag that met our responsibilities finished prior to the energisation of the line, which is a very important point. So that's more of a construction focus. If you look at a second example and how the process sits across a maintenance contract, we've had one recently for a state government authority with a 7-year term, looking after all of their social housing. The scope included all planned, reactive, preventative maintenance, again a category 4 rating. So the issue here was really around the commercial model and validating supply chain. Now, noting that we were a managing contractor, subcontractors were going to be delivering the work. At the early stage of the process, the business unit undertook benchmarking and assessed the availability and quality of our supply chain. So what this meant was at the end of the review, we'd only bid 6 of the 8 regions to make sure that our resources and our capability matched the confidence level in the supply chain. So this just shows the process looking at different issues in different situations. The TC checklist validated it was a pass-through contract. Qualifications were there to deal with CPI increases, and because it was greater than $250 million, it was reviewed again by our board subcommittee and ultimately approved. So, you'll see from these examples how the TCC, the functional managers, the PMO and the business managers and leadership group work together. And this is what I meant earlier when I said the TDS is really about our evolving culture, the systemisation of our risk and opportunity management, and the organisational psyche of our business leaders to set the tone for how we want our work shaped, won and delivered. So what I'll do now is just briefly touch upon this very early phase of the green quadrant, and this is our delivery phase. Now I will finish up shortly, but we can talk about this over coffee or in the Q&A section just because of the time constraints. So when the opportunity is won, the focus of the DMM shifts into mobilisation and completion of key project deliverables and checking back through the TCC conditions, the bid qualifications, and making sure there's a proper handover between the bid team and the team that's ultimately going to deliver the job. And this is where the TCC and the PMO provides that conduit as well as the operational leadership of the business. The complexity of the deliverables and governance oversight is again determined by the complexity of the work that we've won. But regardless, all of our categories 2 to 5 jobs must upload their core documents into our proprietary delivery management application. Now this includes the project mandate, the budget, the forecast, all of their procurement plans, engineering, commercial competency strategy and framework plans, and the schedule. Now this is, I think, one of the really exciting parts of our evolving system, and what it actually allows us to do is to hardwire in all of the contract deliverables and all of the governance deliverables that the client has set and which our organisation has set in terms of the parameters for delivering this work. And how that is then checked off and balanced is the reference up here to hold points. And this is one of the key governance gates that needs to be completed once the DGM app has all the documents loaded into it. For larger jobs, the PMO will actually release that hold point before anyone in the project can incur costs on that job. The app has become the critical reference point for both the project team and our operational managers in the delivery phase to measure and monitor project performance. And the beauty of this is that it is proprietary, and it was actually developed by Steve's team over in New Zealand. So it was geared up very much for our sorts of operations and the way in which we manage our risk and link it to our various governance forums. So look, I'm going to wrap up now, but experience will show that the work done up front in those mustard, blue and early parts of the green quadrant are the key drivers for project success. Like any integrated management system, it's only as good as the people that follow it, the reporting that's done and the actions that are taken in relation to non-conformances. And while the PMO owns our process, the key requirements are owned by the business and the leadership group. And these are incorporated into their reporting metrics and escalated through to our executive committee and other monthly forums as conformances, non-conformances, actions and closeouts. And these are then reviewed and reported on to the board. So I'm going to wrap up there. We have got a little bit more in that green box to chat about over coffee. So look forward to those discussions a bit later on, and thank you for your time.